Today, new drivers will set the tone on Wall Street. Both good and bad news could serve as a market catalyst. Stock investors are digesting corporate news, the economic calendar, and politics. The agenda of the G7 summit consists of the inflation issue, a global recession, the banking sector, the default in the United States, and standoff between the two largest world economies. Despite optimistic data on the US inflation, the benchmark stock indexes did not find support. The Nasdaq was the only index to close with considerable gains. The index closed with the strongest intraday growth in more than 8 months. Shares of high-tech giants pushed the Nasdaq 1.04% up to close at 12,306 points. The Dow Jones shed 0.09%. The S&P rose by 0.45% to close at 4,137 points. The major stock indexes traded with the same dynamic as yesterday in the pre-market. The Nasdaq and the S&P grew by 0.04 and 0.3%, and the Dow Jones lost 0.2%. The S&P is expected to trade in the intraday corridor between 4,010 and 4,210 points. The stock market revived optimism after the highly anticipated CPI report. The US CPI climbed by 4.9% in April in annual terms, softer than the expected 5% increase. And the data cemented hopes that the Federal Reserve could decide to complete the cycle of rate hikes soon. The CPI grew by 0.4% in March in April, following a 0.1% uptick in March. On the flip side, the uncertainty about the political decision on the US debt ceiling overshadowed expectations of the end in a monetary tightening. The Nasdaq was the only index to perk up. Alphabet shares climbed by 4.10% after Google announced that it introduced more artificial intelligence in its main product to withstand the competition with Microsoft. High-tech stocks, including Apple and Microsoft, also grew by 1.04% and 1.73% respectively. The high-tech sector in the S&P sensitive to interest rates climbed by 1.22%. The telecom sector jumped by 1.69%. Shares of regional banks extended their decline after a volatile session last week due to fears about troubles in the banking sector. PacWest and Xeon's shares fell by 0.49% and 2.74% respectively. Occidental Petroleum shares dropped by 3.58% because the profit for the first quarter fell short of market expectations. Rival automotive shares leapt by 1.8% because the e-car manufacturers' revenue for the first quarter surpassed the consensus. The financial results confirmed the annual outlook for production output. Futures on the US stock indexes traded mixed in the New York pre-market following trends on a Wednesday. The indexes are making muted moves even despite a fresh weekly update on the US unemployment claims. Investors are not able to shape a clear-cut sentiment. On the one hand, they feel relieved because ongoing deflation in the US eases pressure on the Federal Reserve. On the other hand, investors are worried about the debt ceiling issue. Oil prices have slumped by 30% this year. The prospects of the Fed's pause are still valid on the back of a fresh factory inflation data. Factory inflation in the United States grew by 0.2% in April onwards, following a 0.4% fall in March. Analysts had predicted a faster growth of 0.3%. The annual PPI went down to the 10th month in a row to 2.3%, the lowest level since January 2021. The core PPI fell to 3.2%. The market cheered the data on initial unemployment claims. And the US Labor Department reported that the number of first-time jobless claims increased by 22,000 to 264,000 last week. The reading is the strongest since October 2021 and much higher than the consensus of 245,000. Despite the decent fundamental background, investors voiced concerns about the gridlock in the debt ceiling. The thorny issue will be discussed at the G7 summit. The Bank of Japan governor hosting the summit said that the debt crisis in the United States should be included in the agenda. The G7 countries should be ready to respond to any consequences for the market. President Joe Biden indicated that he could cancel his visit to the G7 summit next week unless the debt issue is settled in a due time. He also warned that inevitably to lift the limit of government borrowings from the current $31.4 trillion could push the US economy into recession. In the corporate sector, Walt Disney shares slumped by 5% in the pre-market because the company lost subscribers in the first quarter. And the news overshadowed the quarter profit, which came in line with the expectations. Alphabet shares continued their growth and rose by 1%. 90% of the companies included in the S&P 500 have already reported their profits for the first quarter, and the overall annual profits slipped by 0.6%. This result raises doubts that the US economy has entered into a technical recession. While the stock market is trading cautiously, the currency market is making wild price swings. The euro and the sterling incurred heavy intraday losses. The US dollar is the winner today. Its index surpassed 101.80 in the New York pre-market, but the increase in the US unemployment claims discouraged the dollar bulls. Having gained 0.2%, the US dollar index is trading at about 101.70 at the time of recording this video. The intraday corridor for the instrument is seen between 101.50 and 102.30. The US dollar owes its optimism to fresh data from China, which casts a shadow on the global economic outlook. Consumer prices in China grew in April at the slowest pace in more than 2 years, whereas deflation of producer prices perked up steam. The minor growth on consumer prices signals that domestic demand remains soft. At the same time, deflation of producer prices highlights heavy later on factories. The data revived fears that the second global economy lacks momentum, which is not enough to spur global economic growth. So the pound sterling is trading under pressure today despite the Bank of England's decision to raise the key interest rate by 25 basis points to 4.5%. All in all, borrowing costs stand at the highest level since 2008, and the British Central Bank does not predict a recession anymore, but now expects inflation to go down slower than initially projected. In the light of the red-hot inflation data, the market foresees a 5% chance for a rate hike by 25 basis points in June and a 95% chance of a pause in the Fed cycle of rate hikes. In addition, the market predicts three rate cuts by 25 basis points each by the year end. Today, the currency market will depend on comments by policymakers at the G7 summit. Investors hope to find out clues to the future of the global financial system. The Canadian dollar held its advance because of the firm US dollar and the fallen oil prices, and the USD CAD pays trading higher. Having grown by 0.6% intraday, the currency pays now trading at 1.3455. The intraday corridor for the instrument is defined between 1.3420 and 1.3520. The loonie opened today on an optimistic note. Oil prices were regaining losses, though without confidence. Despite early optimism, oil prices failed to sustain a rally of the previous days. Both benchmark rates reversed their trajectory for obvious reasons: concern about the slowdown in the global economy. Brent crude slipped by 0.7% to trade at $75.71 a barrel, and WTI sank by 1.05% to trade at $71.80 per barrel. Earlier, sharper than expected contraction in the US gasoline inventories drove prices up, which mirrors high demand for transport fuel. However, weak inflation in China sparked off fears and enabled the Lunis weakness. The crypto market traded mainly in the red in the New York pre-market. Popular tokens reversed downward after a seesaw on Wednesday when the inflation data encouraged a rally in top cryptocurrencies. Later, the rumor that the US government sold bitcoins was $277 million, enabled a fall in the crypto market. Bitcoin managed to stay above 27,000. On a Thursday, Bitcoin settled at about 27,500. Popular altcoins traded lower. Ethereum, Solana, Ripple, and Litecoin shed 0.8% to 2.4%. As for the industry news, bankrupt cryptocurrency exchange Bittrex Incorporated received court permission Wednesday to borrow $7 million in a Bitcoin to fund the start of its Chapter 11 case. Settle-based Bittrex filed for bankruptcy Monday, saying it intended to return customer funds and to wind down its US operations. Overseas branches will continue their operations. Bittrex reckons it has enough available funds to fulfill its commitments in full against customers in the United States, and the U.S. Internal Revenue Service has filed tax claims worth a staggering $44 billion against bankrupt crypto exchange FTX and its affiliated entities. The IRS has put forth for 45 claims against FTX companies related to unpaid taxes, which could be a major concern for FTX creditors, given that the agency is claiming priority over creditors in the bankruptcy case. The intraday outlook for Bitcoin is a corridor between $27,300 and $28,100. If either of the borders is broken, the price could retest $26,800 and $28,600. InstaForex team wishes you gainful trades and subscribe to the channel and follow news with us. And see you online tomorrow.